How does the great state of Montana tax retirees? Well, let's find out here today on the Heritage Wealth Planning YouTube channel. Welcome, my friends, to another edition of the Heritage Wealth Planning YouTube channel, the place where we talk about how Montana taxes retirees, as well as everything else under the sun when it comes to financial planning. A place where you can get your income taxes reduced, increase your income, and retire comfortably. Take a deep breath, and it feels so good to say, you know something? I'm glad I'm watching this guy Josh's YouTube channels because I feel like I'm grasping some knowledge that some other folks aren't talking about. As always, if you like the channel, don't forget to subscribe down below. Subscribe always helps out, and then hit the little notification bell down there too. I think it's right there to be notified of future content. I do try to do 5 videos a week. Sometimes I do more. I don't think I've ever done less since I've been doing this, but I try to do 5 videos a week, and so you'll always be notified of new and improved content that we provide, so don't forget to subscribe. All right, let's dive right into Montana, the great state. I've never been to Montana. Big fan, but let's see. So we start with Kiplingers, and as you can see, Montana's got the light blue, which is on the not tax-friendly side for retirees. Let's see why that is. Interesting. So we're going to start again with Kiplingers as we do, and we're going to wonder why Montana is not friendly for retirees. I would have thought it would be more so. I'm actually kind of surprised. All the states out west are not nearly as friendly as I would have thought. It's interesting to me, actually. Got a little itch there in my eye. Sorry about that. All right, so Montana is not tax-friendly. The Treasurer state is one of the 5 states that do not pose a general state sales tax. That's the good news, but the bad news is that Montana taxes virtually everything else, all forms of retirement income, including Social Security. The state allows a pension and annuity income exemption up to $39.80 per person, subject to certain income limitations. And residents 65 and older can exclude up to $800 for single filers or $1,600 for married filers of interest income from state taxes. There is no state sales tax, so I like that. I'm a big fan of that. Resort areas such as some of these you're familiar with have local sales taxes. Income tax range are low on 1% on up to $2,900 taxable income, and 6.9% on taxable income over $1,740. Wow, that's let me get my trusty calculator, which I don't have. Montana does permit filers to deduct some of their federal income tax. Now remember, taxable income, I don't have my calculator, but if you take $1,740 and add, if you're married filing jointly, and add $36,600 to that. So $36,600 plus $17,400 would be, was that $54,000? Yeah, $54,000. So before you're in this high income tax range, you have to have $54,000 of gross income before you're in the high income tax range. So just keep that in mind. The difference, again, I say this every video, gross income versus taxable. If it's taxable income, you got to add your standard deductions and or other deductions that you have. If it's and that will get you to where you need to know your gross income is. So that gives you about $54,000 before you're in this range. But I mean, to be in the 1% tax bracket, it doesn't take much, that's for sure. Social Security benefits are fully taxable. The tax amount may be different from the federal tax amount because Montana taxes some types of income that the federal government does not, and vice versa. Exemptions for other retirement pension or retirement income. The state allows a partial pension exemption adjusted for inflation each year. For 2016, the maximum exemption was $4,070 if federal adjusted income was $33,910 or less. So again, this is adjusted income. And again, where there's always confusions, the difference between adjustable income and taxable income. Taxable income right there. All right, so that's not much, my friends. I mean, AGI at $33,910. If you have income above that, you're not going to get the $4,000 exemption. That's for sure. That's not much. If both spouses are receiving retirement income, each spouse can take up to the maximum exemption if the couple falls under the income threshold, which is that right there. I mean, that is not much. Early distributions from IRAs don't qualify. Single residents 65 and older can exclude $800. Okay, so you can basically exclude some of your interest income from your state taxes, but man, they're basically. I mean, if you have income more than $34,000, and that's AGI income too, so that includes a good portion, if not the full 85% of your Social Security. So that's tough, that's for sure. And that's AGI. That's not taxable income. IRAs qualify for the pension exemption. I'm just essentially saying the pension exemption is null and void for the most part. Property taxes, the median property tax amount is $1,600 on a house of the median value is about $200,000. That's about, what's that, 0.8% or so, 0.85% is a property tax rate. So that's not huge, but that is, that's not huge. Let's see if they have a homestead exemption. Any homeowner 62 or older can apply for a refundable income tax credit worth $1,000 if they have lived in Montana for 9 months and have a gross household income of less than $45,000. All right, so if you have gross income, not taxable income, gross income, that's before your standard deductions of $45,000 or less, you can apply for a refundable credit of $1,000. Let's just say this guy right here has a house worth $196,000. He pays $1,600 in property tax. He and his wife made less than $45,000 of gross income, and they could get $1,000 of that wiped off. So that's pretty good, that's for sure. But it's definitely on the lower income threshold for sure. No state sales tax at registration. County options may be due. No inheritance or estate tax. All right. So by and large, a couple of things I do like. I like the no sales tax. As you know, the big three: state income and property taxes. We can manipulate the income tax a lot with Roth IRAs and various things like that for sure. So the income tax is the one that we can actually work around the most. Can't work around the sales tax so much, that's for sure. And you certainly can't work around property tax. So the fact that Montana, the property tax is pretty low. I mean, 0.85 or so, that's not bad. And then on top of that, they have no state sales tax. That's good, because that means we can, again, work around the income tax that they're doing here. At the end of the day, though, it's not tax friendly for retirees who are ignorant about ways to minimize taxes. And hopefully watching my YouTube channel, you'll be less ignorant about this. So great tax foundation website tells us about Montana. And let's see here. Now, again, I've never been to Montana. I'd like to go one day. I know it's pretty as all can be. Pretty cold up there. Didn't they just get snow? Here it is, June 16th. I think Montana just got snow yesterday or something crazy. Top individual tax rate is 6.9. The total burden for state and local taxes is 8.7. Again, because they don't have a sales tax. They rank 38th in the nation, which is pretty low. So that's pretty low from an income tax perspective. So I'm not sure. There's definitely a variance here between on the income tax and what Kiplingers were saying in terms of not tax friendly. Tax freedom day is April 17th, which is in the top 20. So that's good. If they're ranking 38 according to Tax Foundation and they don't have a sales tax and the property tax is only 0.85 or so, I don't know how Kiplingers is stating that they're not tax friendly. I know they tax Social Security. I get that, but let's find out. That's a difference of opinion, I suppose. Does not have sales tax. I mean, so gas tax is 32 cents a gallon, and if you smoke, you're paying $1.70 an extra for a pack. Property tax is a 0.76. Yeah, so it's even lower than what I anticipated. So 0.76 is pretty low. In the state and local property tax calculations per capita, again, you just can't factor in the per capita. That's just the average. So Ted Turner has got his $1 billion mansion over here, and old Josh has his $100,000 ranch house over here. If you could do the per capita, we're both multi-millionaire property owners, and we're certainly not. So 0.76 is good. No sales tax is good. And then individual taxes of 8.7. Yeah, I don't see how the tax or the Kiplingers are saying it's such a bad state for that. Let's see what Smart Asset does, because they factors in income taxes. That's it. So we know the property tax is low. We know the state sales tax is low. Let's see what their income tax is. And again, they do tax Social Security. So as we do, as we say, we got $25,000 of Social Security, $25,000 of retirement income, married, filing jointly, born in 1953. That means we're over 65 years old. And let's see what we got here. In the state of Montana, yeah. So if you got $40,000 or $50,000 of income, 25 from both Social Security and the retirement income, you're only paying $474. I did just have it up here as $50,000 for retirement income. So let's just see what they said there. So that's going to be a big jump. It looked like, yeah, so a significant jump there. But still $3,000 on $75,000. That's not what's that? That's about 5% rate. So that's not good. Let's mix these two around though. We'll say 25,000 here, and then 50,000 there. And this is where taxing Social Security can be problematic for sure. And yeah, so if again, the reason they don't tax you much here is because you got to understand the provisional income terms of how Social Security is taxed from the feds, which goes down into the Montana tax code. And I'm not going to get too deep in this. I got lots of videos on how Social Security taxes. But again, you take half of this, 25,000, you add to this right here, 50,000. All right, so now what happens is, if you're married filing jointly, the first 32,000 is not subject to taxation from the feds. So now what happens is you have 50,000 minus 44,000. That is $6,000 right there. That's taxed at 0.85. I wish I had my I do. Sweet. So we got 50,000 minus 50,000 minus 44,000, which is $6,000. We times that by 0.85. Now, hang with me, my friends. There's a method to my madness. That gives us 5,100. We have 44,000 minus 32,000, which is $6,000, which we add that $6,000 because basically what happens is from 32,000 to 44,000, half of that amount of money, which is $12,000, is taxed at half, right? Half of that amount of money, I should say, is subject to taxation on Social Security. So 32,000 to 44,000 is $12,000. 6,000 of that is subject to income tax in your Social Security taxable income. And as confusing as all can be, I know. But just remember, 0 to 32 is tax-free. 32 to 44, half of that amount, 32 to 44, it will be taxable from Social Security taxation. That's $6,000. Anything above the 44,000, 85% of that is subject to taxation. Does that kind of make sense? So what happens here is we got 5,100 plus 6,000 plus 25,000, and our taxable income then is 36,100 from the feds. That's it. So we only have 36,100 of taxable income from the feds, even though we have 75,000 of gross income. And that's the benefit of Social Security planning, my friends. So again, look at the difference between the taxes of Montana at having that much in Social Security versus what we just did, which is we just switched the numbers around. And again, this is not a one-time deal. This is every single year. So it goes from 474 to 3,000 something. Yeah, I mean, you're almost, I don't even know what that is. That's 6, 7, 8 times, 9, something like that. That's 10 times almost, 9 times. That's a significant increase in taxation simply because you didn't have your structure set up where your Social Security could play a huge role. So if you just learn some techniques to get this higher and this lower, you're going to be in a wonderful place. You're going to be in a wonderful place from a tax perspective, and it's why you got to do some planning. Let's see what else they say here, smart assets. So basically, now this is going back to where you got 25,000 Social Security and 50,000 retirement income. They break it down that you got $5,200 of federal taxation, 3,000 of state. So your total taxes are $8,300 on 75,000 of income. That's pretty significant. I mean, $8,300 on 75,000 of income is divided by 75,000. That's 11% tax bracket, my friends, and there's no getting around that. Now watch this though. Watch this. 25,000, 50,000. Watch. Look at that. Look at that. Just by moving these numbers around, you're going to save a beaucoup, as we like to say in French, which I don't speak. You're going to save, I mean, we're talking, what's that, $6,500 in taxes a year. That's a big deal, my friends. Montana is moderately tax-friendly towards retirees. Yes, I think Kiplinger's one time is wrong here. I don't think Montana is that bad at all when you factor no sales tax and low property tax. Withdrawals from our retirement accounts are fully taxed. That is not going to include Roth IRAs. Provident pensions are fully taxed, and Social Security is mostly taxed. One thing I noticed, I actually emailed the folks at Smart Asset. I'll show you here in just a second. I just want to see, and here's their income tax rate. So basically, again, this is taxable income, 6.9%. That ain't cheap. How high are property taxes? That's basically effective tax rate. That's what I said, about 0.85 or so, 0.75, 0.85. And I don't see any homestead exemption other than that credit that you're not really going to get unless you have not much income. I do like the fact that they don't have any sales tax. One thing I wanted to point out to you, though, this was, I think Smart Asset messed this up big time, actually. And I emailed the folks at Smart Asset. Let's see if they show it to us here. Maybe I can go to, bear with me just a second, my friends. Well, anyway, if you go down, this is the most tax-friendly places for retirees, and I guess it's going to have a hard time loading up for me. I'm trying to see if, I'm trying to see if Smart embed these calculators onto my own website. I don't feel comfortable just using that without their permission, so I'm waiting for them to say yay. I do embed the tax foundation stuff on my website. I'm waiting for Smart Asset to say yay. I don't know why they wouldn't, but anyway, we'll see. Some people they get nervous when you're using their stuff. But anyway, it does show here. But basically, in this, if you go down here, most tax friendly places for retirees, they use this person who's got $50,000 of income, of which 15 from social, 10 from here, 10 from retirement savings, and 10 from wages, and they just have them paying way too much tax. It wasn't actually. Let's see if they show it here. Yeah, it's having a hard time load. This calculator is just off. There's no other way around that. In fact, I think it's off by about 25% according to my calculations. So I found that this one right here I did not like. So you just got to be careful on these retirement calculators, my friends. Some are good. That's why I like using these 3 states here or 3 websites, because some are good and some leave a lot to be desired. All in all, Montana looks a lot better than I think Kiplinger says. I'm not sure why Kiplinger says tax unfriendly, other than just a broad, structure that they tax Social Security. But by and large, no state sales tax, low property tax. And if you do some manipulation on your income tax, you can be in a pretty good place in the great state of Montana. Hope this helps. Like I said in the beginning, don't forget to subscribe. Give me thumbs up, please. Thumbs up always help. Comments are always welcome, my friends. Comments. Don't forget to comment down below. I'll answer them too. I do answer every comment that comes in, unless it's just odd. And then lastly, hit the notification bell to be notified of future content. See you next time on the Heritage Wealth Planning YouTube channel. Thanks, guys.